Greece's parliament narrowly approved a law Wednesday that would give the government greater flexibility to privatize the country's public utilities, but the fractious vote underscored the widening rift within the ruling coalition a week ahead of a critical debate on a multi-billion-euro austerity and overhaul package. A squabble among the three-party coalition over labor overhauls the country must enact as part of the €13.5 billion austerity package has raised doubts in recent days over the government's ability to secure approval of the measures in Parliament and could further delay fresh aid for the country, which had been. Thank you for trying verbose. This recording will go away once the product has been purchased. Expected later this month. The privatization law, which had been seen as procedural and was earlier expected to pass easily, won narrow majorities for most of its articles and only by a plurality on one of the key measures relating to the privatization program. However, many deputies from the coalition's junior partners, the Democratic Left and Socialist PASOK parties, didn't cast a vote, while others split their vote, supporting some parts of the bill but rejecting the rest. The mixed result came as Eurozone finance ministers held a conference call to assess Greece's "thank you for trying" verbose. This recording will go away once the product has been purchased. Progress in meeting its commitments under a €173 billion bailout and discussed fresh aid for the country. In a statement issued after the call, the ministers urged Greece to sort out remaining issues before it can receive the €31.5 billion aid installment and didn't commit to a specific time frame for disbursing the aid. An earlier draft of the statement, seen by the Wall Street Journal, had indicated that the finance ministers would seek to politically endorse the next disbursement in principle at their November 12 meeting, language that was dropped in the final statement. Thank you for trying verbose. This recording will go away once the product has been purchased. In an apparent sign that their decision will hinge on approval of the austerity measures. Speaking after the call, German Finance Minister Wolfgang Schäuble said that reaching the decision on the aid by the November 12 Eurogroup was an ambitious target. "We call on the Greek authorities to solve remaining issues so as to swiftly finalize the negotiations with Troika institutions," the Eurogroup statement said. In an effort to put an end to objections by his junior partners, Greek Prime Minister Antonis Samaras urged them Tuesday to back the austerity and reforms package. Or thank you for trying verbose. This recording will go away once the product has been purchased. Risk plunging the country into chaos. Mr. Samaras said that negotiations with a troika of inspectors from the European Commission, the International Monetary Fund and the European Central Bank on those reforms had drawn to a close. Mr. Samaras's room for maneuver, however, appears to be narrowing. The bill voted on in Parliament aims to speed up and simplify privatizations, as well as reverse a previous obligation by Greece to maintain a golden share or minimum stake in certain state-controlled companies including Hellenic Petroleum SAPLPE. At Public Power Corporation PPC. At the State Lottery Company OPAP SAOPAP. At. Thank you for trying verbose. This recording will go away once the product has been purchased. The Athens and Thessaloniki Water Authorities, the Greek Postal Service, the Piraeus Port Authority SAPPA. And other ports around the country. In an attempt to head off opposition to the law, late Tuesday, in the final hours of debate leading up to Wednesday's vote, Finance Minister Yanis Stournaras accepted demands by some of the coalition deputies giving Parliament the right to ratify privatizations in key sectors. But even with that concession, the central article in the legislation, Article 2, passed with only 148 votes in favor versus 139 against. That's well short of the 176. Thank you for trying verbose. This recording will go away once the product has been purchased. Seats the coalition controls in Greece's 300-member parliament, with Article 2 only passing thanks to a reduced quorum in the chamber. It also bodes ill for the more difficult vote next week when the coalition will be tested anew to vote on a €13.5 billion package of austerity and reform measures. Democratic Left, which controls 16 seats, has said it will not vote for the package unless labor reforms demanded by the Troika are either renegotiated or withdrawn. Informally, PASOK has said it will support the measures, but the party is still debating its official stance. Thank you for trying verbose. This recording will go away once the product has been purchased, and may take a decision at a meeting later Wednesday. At least 2 socialist lawmakers have indicated they might vote down the package, while another 2 or 3 are said to be wavering. When it comes to the measures, there will be more serious objections than what happened with the privatization vote, said a veteran PASOK official. Still, I expect that big majority of PASIC deputies will back the measures since the alternative would be a full economic collapse. We expect to see 3 defections maximum. That vote will come as anger on the "thank you for trying" verbose. This recording will go away once the product has been purchased. Streets continues, with Greece's 2 major labor unions, private sector GSE and public sector ABI, calling the 48-hour strike for next week, the day that the austerity measures are due to be considered in Parliament. Even before the privatization vote, the cohesion of the coalition was going to be tested, with Democratic left trying to assert themselves and rein in Samaras, said David Lee, an analyst at Control Risks, an independent risk consulting firm in London. The privatization vote passed narrowly, suggesting even more testing times ahead and a lot more water under the bridge to go. This is a huge "thank you for trying" verbose. This recording will go away once the product has been purchased. Test for the coalition. Also, after a period of relative calm, demonstrations and strikes are returning to be a much more regular feature, with the 48-hour general strike called for next Tuesday and Wednesday. An upgrade of tension is likely in the next week or so. Greece's privatization program is already badly off track. After talks with the Troika, Greece has slashed its target for privatizations to about €11 billion by 2016, after missing previous goals. Previously, the government had set a target of €19 billion by 2016, as part of an ambitious plan to raise "thank you for trying" verbose. This recording will go away once the product has been purchased. Money from a host of privatizations and asset sales over the coming years to help pay down debt. But hampered by a deep recession, plunging asset values, political uncertainty and nervousness among potential investors about the country's future inside the Eurozone, the privatization program has almost ground to a standstill. Up to now, Greece has only raised about €1.6 billion since its first bailout loan in May 2010. On Wednesday, Greece's government submitted a revised budget for next year that forecasts a darker outlook for growth and further deterioration of debt and deficit levels than previously. "Thank you for trying" verbose. This recording will go away once the product has been purchased. Projected, as austerity measures demanded by the country's international creditors weigh on the economy. The budget, which was submitted to Parliament and is expected to be voted on next week, anticipates a 4.5% contraction in the economy for 2013 from a forecast of 3.8% contained in an earlier draft, presented at the start of October. The level of debt to gross domestic product is forecast to rise to 189.1%, compared with an early October forecast of 179.3%, while the overall budget deficit next year is now expected to be 5.2% of gross domestic product, higher than the "thank you for trying" verbose. This recording will go away once the product has been purchased. Previous target of 4.2%. The primary budget surplus before taking into account interest payments on the national debt is forecast at 0.4% of GDP, versus a previous target of 1.1%.